these major crashes are actually the end of the installation period, and they signal the need for finance capital to hand over power to production capital. That's not easy. It doesn't happen automatically. The state has to come in, and people have to get very angry.
It's war, the greatest concentration of fighting troops in Washington since 1865. The orders of the president must be obeyed.
Angry protesters have taken to the streets of Athens for days. It all came to a head Thursday when lawmakers approved controversial budget cuts.
I'm afraid that the current turning point could take about 7 to 10 years, because our current understanding of it is just save finance and that'll save the economy. That's not true. Finance has to be reoriented. It has to be taken in another direction. It has to be made not profitable to invest in the casino and very profitable to invest in the real economy.
There are a couple of important connections between what's happened in America and what's happened in Europe. Banks lending money to people, and other banks and countries that they should never have lent money to. The Greeks got money for the same reasons that the US subprime borrowers did, that nobody was thinking very hard about can they actually repay it.
In the Eurozone, the creditors have a lot of power because the governments aren't sovereign. Eurozone governments are not sovereign governments. They are dependent governments. They don't control their credit. They don't control their central bank. They don't control their monetary policy. They are, in important ways, local governments. They're just local governments. They're not real governments at all. And therefore, they are very dependent on the good wishes of their creditors.
The bankers are going to Greece and say, oh, you can't pay the debts. We want you to impose austerity, shrink your economy by 20%, lower your wages by 30%, give us the Parthenon, give us your islands, give us your land, give us your water and sewer system, and just privatize.
I think there is a big challenge for democracy because now we are facing forces that are beyond the nation state. If we talk about hedge funds, if we talk about multinationals, if we talk about the concentration of power, money, media in the hands of a few, they sometimes have more money in their hands than our budgets. They have greater influence. They can even corrupt politics if you don't have strong democratic institutions in each country. And where we see more and more our citizens coming out on the streets with very similar agendas, whether it's in Tahrir Square, whether it's in Brussels or Athens or Wall Street, saying we need more of a voice.
You can't have three things that we all seem to have wanted at the same time. Deep globalization, including the integration of financial markets, not just globalization in terms of the movement of goods and people, but the movement of money freely in instantaneous and unlimited amounts. You can't have that and at the same time both have national autonomy, that is autonomy of independent policymaking, and sustain working democracy. You can give up on democracy and have governments that do what the financial markets tell them to do, right? You can have a completely integrated political system, give up autonomy, which the Eurozone is clearly, sort of frozen in the face of. Or, as we did for the golden years after World War II, you can restrict the movement of capital. Of those three alternatives, restricting the free movement of capital, despite what the economists and finance theorists will say, is the least bad alternative.